For a check of what's happening in the world of business, our business editor Kate Moody's here. Hi there, Kate.
Hi, Tom.
Now, that EU row with AstraZeneca just keeps simmering away. This is, of course, with regards to the delivery of COVID-19 jabs. You've been taking a closer look at how governments place a hold on those doses.
Yeah, it's a long and very expensive process, Tom. The US, UK, Japan, and Brazil are among those who, like the European Union, signed pre-orders several months ago with several pharmaceutical giants while they were still researching a possible vaccine. Brussels made substantial down payments from the bloc's emergency support instrument. Member states are making up the difference to buy and distribute those shots to their citizens now. Claire Rush has the details.
Since the beginning of the pandemic, the EU has signed deals to secure 2.3 billion doses of the coronavirus vaccine. Through down payments, contracts have been concluded with at least 6 companies, including Pfizer-BioNTech and Moderna, the only 2 vaccines to be approved by the EU for emergency use so far. But it's the AstraZeneca deal that is currently sparking a row. In August, Brussels made a €336 million down payment to secure the first 300 million doses. But this week, the company announced it will only be able to supply a quarter of the EU's pre-order due to manufacturing problems at plants in Belgium and the Netherlands. Some analysts say such production issues could be solved if the EU forced companies to share their patented vaccines.
Today, these patents are generating tremendous revenue for pharmaceutical companies. But the priority should be to vaccinate as many people as possible in as many countries as possible. If we truly considered vaccines a common humanitarian good, these patents wouldn't exist.
For now, the manufacturer says UK orders may be prioritized as they were placed 3 months before the EU's. The UK also approved the vaccines from Pfizer, Moderna, and AstraZeneca weeks before Brussels, allowing it to launch its vaccine rollout earlier. Some 7 million people in the UK have received a shot, roughly 10% of the population. By contrast, in the EU, only 8 million have gotten the jab, barely 2% of the bloc's residents.
New data from the U.S. Commerce Department confirmed the American economy had its worst year since World War II. After a huge plunge and then recovery in the second and third quarters, respectively, U.S. GDP grew at a 4% annual rate in the final 3 months of 2020. The year as a whole saw a 3.5% drop because of the coronavirus pandemic. Well, the most lasting damage could come in the labor market. The number of new applications for jobless benefits dropped last week slightly from 900 to 847,000. That figure is still about 4 times higher than the weekly average a year ago before the pandemic struck. More than 18 million people are claiming some kind of unemployment benefits, and employers continue to shed jobs in the month of December. The official unemployment rate stood at 6.7% at the end of last year. But Federal Reserve Chair Jerome Powell says it's likely much higher if those who've given up looking for work altogether are taken into account.
Of course, the real unemployment rate is close to 10% if you include people that's the labor force. It's very much appropriate that monetary policy be highly accommodative to support maximum employment and price stability, which is getting inflation back to 2% and averaging 2% over time.
Well, another round of stimulus is expected to help American workers, businesses, and the overall economy. But that doesn't mean smooth sailing in 2021. One retail group has forecast as many as 10,000 stores could close across the U.S. this year, even as the pandemic is brought under control. That would represent a 14% uptick from store closures last year. Consumer spending has recovered from its pandemic lows, but remains concentrated online, not in person. Let's check in on the day's trading action now. A mixed close for the major European indices. Saw London's FTSE 100 in the red. The CAC 40 up nearly 1% here in Paris. European airline shares rose between about 3 and 6% today. Well, after its worst session in 3 months, Wall Street has turned sharply higher this Thursday. The Dow Jones up about 600 points. That's around the same amount that it lost overall yesterday. The S&P 500 up nearly 2%. The Nasdaq 1.5%. Shares of American Airlines are up around 8%, despite taking a $2.2 billion quarterly loss. That was not quite as steep as feared. Well, the biggest mover on Wall Street this week has been a struggling video game store called GameStop. For most of last year, GameStop shares were worth between $3 and $4 apiece. In recent weeks, they've peaked at $483. Amateur traders have been pouring their money into the stock, hoping to squeeze big hedge funds who had bet against the company's fortunes. Many online are rooting for the traders, seen as the underdogs in a David and Goliath stock battle. The Securities and Exchange Commission says it's monitoring the situation over fears about possible market manipulation, and analysts say that could impact broader trade as well.
The activist community decided to bid up the stock and force the shorts to cover. And what you're seeing on a daily basis now is the stock is trading way more than its volume. We're seeing something unprecedented, and it's up because it's a pyramid scheme.
And this movement that we've been seeing over the last couple of weeks, Tom, really highlighting one of the mysteries of how the stock market really works and how just a few people can have a massive impact on the numbers.
Yeah, indeed. I can see why people are raising the flag about manipulation with that story. Thank you very much indeed. Our business editor, Kate Moody, thanks so much. I'll be back.